You don't need a big account to make really, really great progress when it comes to trading. I started small, and it was slow, steady progression that got me to the point that I am. It was a simple and scalable, focused method that got me here. If your goal is to grow your portfolio, then this is the blueprint that I wish I had when I started 20 years ago. Most traders with small accounts blow it up in a bad way before they even get going. But what if I told you that the secret isn't more trades? More is not better, it's smarter trades. Let me walk you through my strategy that helped me grow without risking the house. Now, before I get going, I don't want you to come in here and copy all my trades. What I do want you to copy is my process. I'm sharing this so I can teach you what's behind the process and how you can implement it to your style of trading. So now let's define what swing trading is. Swing trading, there's a couple different types of trading. You have day trading, which is intraday. You're never in a stock overnight. You have long-term trading, which you could be in for weeks to months to possibly years. And you have swing trading. This is one of my preferred ways of trading. Why? Because you're in something between 1 and 10 days. You're in and out of it in a short period of time. And it's a very lucrative way to make money if you pick the right stocks based on the right patterns. Now let's pull up a chart real quick and check out what's on a swing trading chart. Then we'll get into how you go through and execute a trade, how you find stocks, etc. So this is a swing trading chart, also known as a daily chart, and it has a bunch of stuff going on. So right here you have your candles. Each one of these candles is one single day. So this is today, this is the 5th, this one is the 4th, this one goes to the 3rd, but actually not the 3rd because it goes back to last Friday. But each one of these is one single day. It's not 1 week, it's not 1 minute, it's not 15 minutes, it's one single day. That's something very important to remember. You can see day is highlighted right here. This is your volume. This is how many shares are being traded or transacted per day. Every one that's bought or sold is included in this number. And as you can see right here, you have 14 million shares being traded here on American Eagle Outfitters, and we'll get into why I picked American Eagle. And it doesn't have to do with Sydney Sweeney. So when we look at this, what is this? This is our trend. This is something that's very important. It tells you which direction the stock is moving. It's moving long, meaning that it's going up and you want to buy it to go long, or it's going down, which is a short, which means that you're betting against the company, but we won't get into shorting in this video. That is really the main things that I need you to pay attention to here, but let's supplement a couple of things. These colorful lines you might be asking about. The purple line is your 25-day moving average. What the price is averaged over the last 25 days. This is the 50-day moving average, same equation, 100-day moving average, 200-day moving average. The larger the moving average, the stronger point of resistance or support it plays. That's what you really need to know at this point. Now you might be asking, okay, well, now that we've seen the chart, what does your day actually look like when it comes to trading? Because I work in the morning and I work a normal shift. I say I work from 8 a.m. to 5 p.m. I can't really get the time to sit down. Yes, you can. This is something that I did while I was in undergrad, and honestly, I did a little bit of it in high school, and I did some of it in medical school before I quit medical school and went on to do this full time. You have the time to do this. It really doesn't take a lot. When it comes to day trading on a 15-minute chart, that is very labor intensive. What you're going to need to do is sit there all the time, sitting at your computer. But when it comes to swing trading, that's the beauty of it. You check it once, you probably check it twice a day, 5 minutes here, 5 minutes there, and you're good to go. Go to the bathroom, go in a stall, check your chart, and you're good to go. So what does my day look like? Well, I wake up in the morning and I start going through and start screening for stocks. Now, when I screen, I do something a little bit different. I have a set number of stocks that I trade on a consistent basis. So I'm not going and looking for new stocks every day. Why is that the case? Well, the reason behind that is I like to kind of learn the behavior of the stock. Every stock to me is a living, breathing object, and it has behaviors. Just like you, your kids, your dog, whatever, they have behaviors that they follow. Stocks have the same behavior. What do I mean by that? Well, I could see on a consistent basis that every time American Eagle, for example, runs up above the purple line, what does it do? It pulls back below it. And then it runs and it tries to break through the purple line again, and it fails. And you can see here it tried to run, and every time it gets that 25-day moving average, what happens? It just kind of sits on that 25. Look at even this. It broke through. It broke through above the 50-day moving average, and what happened? It came back to the 25-day moving average. Here, we're looking and saying, okay, it broke out above the purple line, which is down here at 1066. Current stock price is at 12. But what are we seeing today? We're seeing a big pullback. It wants to come back to the purple line. You're not going to see this with all stocks, but with American Eagle, over the past several months, we've seen that it is very attracted to the 25-day moving average. That's something that you're not going to know unless, one, you could just pull up a random stock and see that and identify it. But being a new person, you're not going to be able to do that right away. You will eventually, but not right now. But if you watch American Eagle every day, you're going to say, oh, that's interesting. It just always wants to hug the 25-day moving average. So I have a list of stocks here that I watch on a consistent basis. And these are kind of what I look for. I just look at the same ones every day. Now, if that doesn't fit your style, you want to follow the momentum of the stock market, there's another option for you. Now, what you can do is come over here to Yahoo Finance, and you could click on markets, click this drop down, and see what the most actives are. Most actives goes back to the volume. So when you're looking at volume, it's number of shares transacted. We like to see a lot of shares transacted during the day. Why? That keeps prices moving in one direction or the other. Would you rather have a stock that is highly in favor of the market as far as participation goes, or highly out of favor? Well, highly in favor, because you're going to get more movement up and down. And when you're swing trading, you can go long on a stock, you can go short on a stock. That is not something that you can do if you're trading an AT&T or a Coca-Cola certain times of the year. It's just not going to work. So if we look at this, we can see average shares traded on Palantir are 78 million. We're not even 2 hours into the market, and we already have 65 million shares traded. NVIDIA, 193 million shares traded on average. We're at about 52 right now, so we're maybe about 25% of average volume. So what do? I like to come through here. If you're picking stocks for the first time, and you're like, I don't even know where to start. How did you come up with the stocks that you got on your list? This is a great way. You can write down these top 25 here and put them in an Excel sheet, write them down manually, whatever. Come back the next day, do the same thing. Come to markets, go to most actives. Come back the next day and do the same thing. Do that for 5, 6, 7, 8, 9, 10 days in a row. And then go, all right, which 10 are consistently in here and highest on the list? Why do we want to do that? Because we want the most market participation. The more participation there is in a stock, the better off it is going to be for you, because you're going to have something to trade on a consistent basis. So if I looked at this, Palantir, NVIDIA, Intel, HIMS, Lucid. Lucid is probably in there consistently. Joby Aviation. This one might not be in there all the time. American Eagle might not be in there all the time. It's getting a lot of press lately, so it might not be in there. PG&E, SoundHound. I don't know if these are all going to be on there on a consistent basis, but list them, rank them, see which ones are the most popular, and then pick those 10 and say, all right, these are my 10 stocks. Then over time, you're going to adapt. I mean, you probably look at some of my stocks in here and go, Duolingo, that's random. Abercrombie, CCL, Carnival Cruise Line, that's random. Yeah, but it's also taken me quite some time to figure out, okay, these are the stocks that I like. Trust me, I started out trading these market leaders. I started trading out, well, at the time it was FANG. So it was Facebook, Amazon, Apple, Netflix, Google, and Microsoft. Those were the ones that I always started trading. But back in like 2014, when I was significantly day trading, it was all those, and it was 3-time levered ETFs. But for you, it's probably going to be Palantir, NVIDIA, Pfizer, AMD, Tesla. I don't know. That's for you to decide. But that's a way that you can start finding stocks to trade. So now we have our stocks that we're going to trade. So what do? At 8:30 in the morning, I get on my charts, whether it's on my phone or on my computer, and I kind of see what's moving pre-market. Now, pre-market doesn't mean it's not the end-all, be-all. If we come and look at something today like a CCL. Look, CCL started the day opening at about $30 a share, and today it's down to about $29 a share. So you can see that it opened high, great, pre-market it was great, and then it pulled all the way back down. That's going to happen. You cannot just go and say, I'm going to execute a trade based on pre-market pricing, but I just start screening for stocks. And if I'm new, something else I'll do is I will just start going through all my stocks here and looking for different patterns. I'll say, okay, let's pay attention down here in the sweet spot. Do I have any stocks that are going long, so going in this direction in the sweet spot? And all I'm going to do is train my eye. I'm going to click on Duolingo. Do I have that? Kind of. This one? No, definitely not. We're looking for this movement. No, definitely not. No. But you can see, okay, we have something. Disney is kind of developing in this direction. I might write Disney down on a piece of paper and say, okay, let's go check it out tomorrow. The reason that you're doing this is just to train your eye. This one looks pretty good. Robinhood, starting to move in that direction through the sweet spot. Then I'll go back and say, okay, Do I have any stocks that are increasing in volume? So I'll come here, and what do I mean by increasing in volume? Well, I'm going to draw this in green. Let's say yesterday's volume looked like that, and let's say today's volume looked like that. So what I'm going to do is I'm just going to go through those stocks again. Increasing volume? No. And the reason for this is what? Just training yourself. Everything about what I'm teaching you, it's simple, but it's pattern recognition. You should be able to open up at some point any chart and identify anything based on that chart. That's the ultimate goal. It's going to take you some time. It could take you a year, it could take you 2 years, but that is the goal. And the only way you're going to accomplish that goal is this type of pattern recognition, going through same stocks, random stocks over and over and looking at these patterns. It doesn't matter what the stocks are. It doesn't matter if it's a cryptocurrency. It doesn't matter if it's an equity. It doesn't matter if it's a commodity. It doesn't matter what it is. It doesn't matter if it's a future. It's a pattern. All we're looking at is the overall pattern, not the ticker symbol. Now, when I print something out, what am I printing out and putting it right next to my desk? It's a trading checklist. You need to have this printed out. Take a screenshot, do whatever you need to do. Have something like this printed out so that you know I'm not going to break these rules. Now, some of these you might look at and say, I don't even know what any of these mean. That's okay. You're going to jump in the Patreon community. You'll learn about it. But my point is, you have to have this checklist. This checklist sits next to my desk. And 21 years later, I'm still going back to the checklist because you can forget something. You could forget something very simple. The 50% rule. It is so incredibly important to trade not going into a 50% rule. And earnings date. This is a very easy one to miss. If you don't have earnings up here, this is what this E is, you could go and trade Elf Beauty and not know that earnings are happening tomorrow. You never, ever are in a stock when earnings are happening. Why? It's a total crapshoot. The company can report the best earnings in the world, the best forward guidance in the world, and the market will react negatively. You cannot be in it, and quite the opposite can happen. And it could just completely go against you. So you're never in a stock during earnings, but you need to have a trading checklist out next to your computer, on an iPad, whatever it is. That is so important, and this is going to save you long term. So let's talk about some advantages and disadvantages to the style of trading that I'm going to teach you, or I am teaching you. Disadvantages. You're not going to get rich quick. That might be an advantage too. You're not going to get rich quick. The idea behind this is for you to do a process that you're going to use for the rest of your life. An ideal situation is a kid that's 12 years old starts this, and he's trading until he's 82 years old. You can do this throughout your whole life. That's the idea behind this. It's a slow, steady process. If you ever read that book about the rabbit and the turtle eventually wins. Slow and steady does win the race. If you luck out and make a ton of money on a stock, it doesn't even have to be trading. What are you going to do? You're going to say, oh, that was easy. I can do that again. It's going to happen for me every time. No, it's not going to happen for you every time. Now, the advantage to trading with me is you're not just throwing poop at the wall and seeing what sticks. That's a lot of what I see out there on YouTube. I think the word trading has one of the worst connotations in the English language because people will just go in with a couple $1,000s, throw it at a stock that's going up, and no reason else to buy the stock except that it's just going up, and then it'll pull back down and it'll just be all gone, and trading doesn't work. That's what people will say. Well, of course, that's not trading. That's just gambling. That's going to a casino and putting money on the table. Actually, you probably have a higher probability at the casino if you know what you're doing. It doesn't make sense to do that. It doesn't make sense to just chase a stock price. You have to have a process behind it. You have to understand volume. You have to understand trend. You have to understand 50% rules. You have to have a basis behind you. So that is the biggest advantage to trading with my style is there's a process in place. It's not just chasing stock price. So there's a lot of ideas that I've thrown at you in a short period of time. Let's go back to the checklist real quick. And then I want to go back to how to pick stocks. So if we look at the checklist, this is something that the community uses on a daily basis. Everybody in the community pays attention to this checklist before they execute a trade. The other beautiful part about the community, it's the stocks that we pick. I said you can go to Yahoo Finance, but you could also be in the Patreon app chatting with people that are also picking stocks. A lot of these stocks, CCL, for example, I am in the trade of CCL right now, and it is due to a specific member in the trading community. He said, Mo, this is completely a 50% rule stock. I think we need to get in this. I'm in it, and that's the reason that I'm in it. It's because we have these discussions in the community. Also, you're going to be able to bounce these ideas off people. You don't understand 50% rule? Have a conversation about it. You don't need to be alone. When I started out in your shoes, I was completely alone. I didn't know where to turn. There was nobody out there. Trading can be a very lonely road. join the community, join me. It's a great place to be for you to have somebody to hold your hand. You are going to become a great trader if you follow the right process and you have the right people around you. Now, I really want you guys to get this blueprint down. I have a great example in this video right here. I want you to click it and go check it out. I'll see you on the next one.